authorities' centralized invoicing and receipting system, all a device authenticated by Uganda Revenue Authority. Of course, in the Act, the government went on to ensure compliance, and they introduced, there was a new section 73B that was introduced to penalize any designated taxpayer who does not comply with the law. Briefly, who uses the EFRIS software? This EFRIS software is the accounting software that we have, that in my understanding, from the accounting point of view, is like any other accounting system. Call it like Tare, QuickBooks, Pastel. Members and computation fraternity who are used to numbers, you find it easy to navigate through this EFRIS system. EFRIS system is mandatory to all VAT registered taxpayers, though even the non-VAT registered taxpayers can use it. A VAT registered taxpayer is the one that is designated by government to correct VAT tax 18% from the final consumers. While in the EFRIS site, the VAT registered taxpayer can issue an e-invoice tax, while the non-VAT can issue the e-receipt. And by virtue of these two functions, EFRIS can also be linked to the financial accounting systems, as I said, like Tare, Pastel, QuickBooks. The people who have used these systems find it easier to navigate through the system. What are the requirements to using EFRIS? An individual or a tax or a non-tax non-individual taxpayer to use EFRIS, she or he must have a team. You must have a team to be able to use EFRIS. You must have a computer. On the computer, you must have loaded a financial accounting system. If you are to connect on system to system, to URA, centralized system, you may have a URA, the URA apps. URA has designed a number of apps. There are those ones on the desktop. There are those ones on the smartphones. Still, to be able to use EFRIS, you must have a printer, because it's basically selling. You are at the selling point. When you sell to a customer, you must issue a receipt, or call it an invoice. You definitely have to have a reliable power and internet connectivity. The other item is that you have to have a competent accountant and an IT person. And at the end of the year, you must always have some cash for annual registration of the integrated system. How does EFRIS work? Like any other financial accounting system, EFRIS has about 3 major options within its site. There is an option of stock management. There is an option of physical document management, and there is an option of reports. There are definitely other options, but the major ones will be the stock management. A taxpayer is required to input all the purchased stock under the stock management option. Within the stock management option, you are able to analyze your stocks. You are able to input your stock when you purchase items, or if you import items. You are able to put item by item in the stock values in the system. Within the system, you are able to analyze your stocks. You are able to see the stock levels. You are able to adjust stocks, and you are able to transfer stocks from one site to another site. For example, if you have a branch, you are a company and you have a branch, you can transfer stock from this branch to another branch. Under the physical management, that is where we can make our sales. You can issue an invoice, a tax invoice or a receipt. As I've said, this system is not restricted only to VAT registered taxpayers, but also to the non-VAT registered VAT taxpayers who only issue the receipt, because a non-VAT registered taxpayer does not issue an invoice, because this invoice has got a component of the tax, but the non does not charge the 18% mandated by the government. So his is the receipt. Still under the physical management, physical document management, you are able to analyze your receipts of the day, your sales of the day, and you are able to say that how many invoices have I made in a day, how many invoices have I made, did I make yesterday? Then within the same option, you are able to do adjustments on the sales. Like we saw in the stock management, we're able to do adjustments in the stocks. Even in the physical document management, you are able to adjust on the sales invoice. You can cancel an invoice. You can adjust an invoice if you make an error, and you are able to also adjust the incoming documents or the invoices. That is where we have the credit notes, that if I make an invoice which is and I make an error, I'm able to correct it, or I'm able to cancel the invoice and make another one. Then the third option is the reporting option. Under the reports, you're able to see the purchases of the day, the purchases of the month, the purchases of the week. You're able to see the sales of the day, the sales of the week, the sales of the month, and the sales of the year. So this system, well, the way it is designed, it gives you all the required reports for any business. We go to how is EFRIS and VAT related. Many people have talked about EFRIS is a tax. EFRIS is not a tax. There's confusion about EFRIS, but EFRIS is not tax. EFRIS is a system, is a software, and VAT is the one which is a tax that is a tax on consumption. It's an indirect tax on consumption under domestic taxes, and it is charged to the final consumer, or at the point of importation, at the point of manufacturer's level. Basically, this VAT starts from when you have a product, when you want to put a product on the market. Say you are a manufacturer, the government requires you to add 18% on your product. If you're importing goods into the country, the government requires the government charges VAT of 18%, and then it is this VAT 18% that is rolled out to different chains in distribution. It is also rolled out at the wholesale level. It's also rolled out at the retail level. So the relationship between the EFRIS and VAT is that VAT is for VAT registered taxpayers, they are required to charge 18% on sales, and the system is designed in a way that it computes the 18% on every item you select for sale within the system, within the physical document management, within the point where we issue the receipts. This 18% VAT is then populated on the total invoice. You are making an invoice, of course, you have item 1, item 2, item 3. It is populating itself to get you the total VAT. And at the end of the day, the taxpayer is able to see the total sales and the total tax amount. This value-added tax in the value chain distribution, I put it in a simple terms that it is a result of the profit margin a trader adds on to the product. If you import an item and you have paid VAT 18% at the border, and you don't want to add on, the profit, then you won't pay the VAT. Then, how is VAT computed and paid? With the rule of thumb that value-added tax payable is computed as VAT output minus VAT input. The VAT output is the VAT we charge on sales, and the VAT input is the VAT we charge or you pay on purchases. URA did well and designed the VAT return schedule where you can summarize your VAT on sales, summarize your VAT on purchases, and it designed a VAT return schedule that it is on the URA portal, and it computes the VAT on sales and the VAT on purchases, and it shows you instantly the resultant VAT liability that a taxpayer or a business person is supposed to pay. The taxpayer is at this point able to view the liability or the VAT payable and be able to submit it to URA. Instantly, a payment registration number or a PRN is instantly generated that you can use it to pay URA, either by bank, by mobile money, or by any other payment mode. The EFRIS in the country and the EFRIS coming in, the way it was it is being introduced by the government and Uganda Revenue Authority, has or came in, though the system to me is simple, it's understandable. You can navigate through the system in a normal way, as long as you are able to understand the numbers and able to go to the next levels of. But basically, as I said, like any other accounting system, it tells you, it shows you. If you are to go to another step, you click on each one invoice, takes to another level, and you're able to go slowly by slowly to understand. But what are the EFRIS challenges? To better understand the EFRIS challenges and the current uproar against the EFRIS, because there's a lot of communication against EFRIS, there's a lot in town. One needs to see it through the lens of a business owner in Uganda, especially from the informal sector. There are over a dozen challenges with EFRIS because of its advanced technology. This is a technology that is introduced to people with little knowledge on technology, but it comes with that advanced level. Then the EFRIS challenges, you find that we have the startup costs, because for you to have to start to connect you to the URA side, you have to have some costs. Then there's also human resource. Then there's also the application in the real time. So basically, some of the challenges that the informal sector, the traders, the people around that they are facing have been categorized in a number of ways. One, we have EFRIS and the personnel. And by no doubt, EFRIS requires an accountant who is competent in tax matters and is able to keep proper records of all other business expenses. The taxpayer in the informal sector, who is a sole proprietor, who is alone in the business, who has been using incomplete records, basically receiving cash, paying cash, and checking on the suppliers and the debtors, because most of the informal businesses, you find they are on incomplete records. The EFRIS, this EFRIS shall need a phased change to taxpayers' mindset. There's also a need for the IT person. When this system was introduced, URA approved some providers of the systems, because not every system will connect to URA. You have to first be approved by URA, and the person that is the company that is connecting to URA server to the URA server, you have to keep is a service provider in this case, and you have to be paying him regularly as time comes, as he comes in to check on the system. How is the system moving? How are the stocks? How have you put in your stocks? How are they in the portal? Being approved, this IT specialist being approved by URA, you find that a trader will need to be paying something to them on top of the competent accountant. And the issue that traders are finding it hard to employ the competent accountant because of the costs that he comes with, or the costs that the person comes with. The other challenge with EFRIS at the moment, as I've said, the startup costs that you need to have. You need to for you to be on EFRIS system. The first scale issue is that once you don't use EFRIS, you have to be penalized. Operating on EFRIS, as was rolled out by URA, the taxpayers, or the taxpayer will incur, or is likely to incur expenses that the business did not contemplate on, and it is quite challenging for within the informal sector. For a business to use EFRIS, it needs, as I said, you need a computer, you need a software, the accounting system, you need reliable power, you need reliable internet connectivity, you need a printer, you need a smartphone, because they have put they have designed apps to be used on their smartphones. So EFRIS comes with some costs that every business will have to incur, and it is at this point that the traders, the taxpayers are saying these costs are high. They are going to eat up our profits. They are going to enter into our business planning. The third challenge is about EFRIS and its penalties. Taxpayers are faced with a dilemma of being penalized for non-compliance. The penalties under the law are twofold. One, failure to use EFRIS attracts a penalty of at least 8 million per month. And the second one is failure to issue an e-invoice or an e-receipt attracts a penalty of 6 million per month. When the EFRIS was introduced, this 6 million brought a commotion within businesses, and some businesses were charged, because at first they issued 6 million per every receipt. Every receipt they would come across was charged 6 million, So this affected many supermarkets, because EFRIS was first rolled in the supermarkets. They were affected. However, URA changed and put the 6 million on per month. So the other amount of money was waived off. Also, where the tax due on the invoice, if like you have an invoice which has a VAT amount, the tax component of about 10 million. For example, the invoice is over 100 million. Definitely, the VAT component will be over 6 million. You'll find that the government takes the maximum. It will no longer consider the 8 and the 6, but it will consider the 10 million, which is above. And that is the dilemma with the EFRIS and the penalties. The fourth one is EFRIS and the opening stock. By the VAT principle, that we pay the difference between the VAT output, the VAT input, taxpayers feel cheated of their VAT input, especially when they buy from non-registered traders of the VAT. Basically, this input-output principle is that for me to claim, for me to remove, for me to say, take away the VAT input, it means I must have gotten an invoice from a VAT registered taxpayer when I got the stock. If I buy from you, who is not VAT registered, it means you have not charged me VAT, and it's like my item in my purchase does not have any VAT input. So in this case, this opening stock, you find that ordinarily at the introduction of the EFRIS system, businesses they had stocks within their shops, and when these stocks were maybe they could have maybe for 1 year or years in the shops, and definitely they had paid VAT, because ordinarily every stock in the shop paid VAT at the importation level, at manufacturer's level, because as I said, VAT, well, I can put it right, that VAT starts at the manufacturer's level point when he's rolling out a product into the market, and also it starts at the importation level when the importer is bringing the items in the country. It's at that point that 18% starts, and you pay 18% to the government by charging the wholesaler, the retailer who buys from you. It is this retailer that when he's going to pay to sell also to the consumer or to another business person, has to issue an invoice which carries the 18%, a value that he will be able to offset from the one he paid when he was purchasing. Basically, when you charge, you offset by what you paid when you were purchasing. But at this point, this is why the challenge that is coming in, that the opening stock of most of the shops in the country had paid 18% to the government. But unfortunately, they bought the stock from non-VAT registered businessmen. And even if that is not if it was not by error, there are cases of importers, cases of manufacturers not wanting to declare the VAT to save on the tax issues. But this way, many taxpayers have paid this VAT twice for the previous year's stock. This is how I may put it in a simple mode, that I paid the stock I have in the shop, already paid 18% to the government at the import level and at the manufacturer's level. Now, when the system came in, it did not put a consideration that this stock you have in your shop has already paid the 18%, and the system will say, charge as you sell. So when I charge the item as it is and I add on 18%, which I had paid also, it means you'll find that I am going to pay the one I have charged on sales, because I don't have the one to remove when I was purchasing. And this is the challenge that EFRIS has come with along, that the government will have to look at that. The fifth one is EFRIS and the market prices. EFRIS comes with business price disparities. And why? Because VAT registered taxpayers are required to add 18% VAT on their products. I have a shop and I'm supposed to charge 18% mandated by the government. I have been on, I'm on EFRIS, I have to charge it. Now, this is where the issue is coming from, that my neighbor who is not registered on VAT is not required to add that 18% VAT on the product. This way, the VAT registered taxpayers will lose out on customers due to the price difference out of the VAT, 18% VAT added, and we call this unleveled ground that is affecting traders, that is affecting the businessmen. The VAT registered trader shall automatically, or in one or another, be ejected out of the market. I put it in a real life example that I am a VAT registered taxpayer. We are all selling a product of 10,000. I will be required to add on 18%, which is about 800. So my price will be 11,800. But the other person who is not on VAT can say, me, I can sell 11,500. The 300 difference in the market in the market prices, well, among traders, is a big difference. So, and by nature, that consumers we like to purchase or to consume at using low prices. I will go to the person who is not on VAT register. Thank you. The sixth point is EFRIS and commodity prices. By the time the product reaches the final consumer, if we start from the importation level, you charge 18%, then you go to a wholesaler level, you charge 18%, then you go to the retail level, you charge 18%. So a person, the final consumer, call the person, could be in Kampala here, could be up country, in the villages, would find this product price slightly higher. And mathematically, this 18% VAT, by the time it reaches the final consumer, it's about, when you compute analytically, it has reached about 22%. It's no longer 18%. So when the products are expensive in the market, the money value is reduced. When the money value is reduced, then the standards of living need to are also compromised. And to maintain the standards of living, it means that the employers, that is the government, and the traders, the business community, will need to increase the salary figures of the workers. So it puts an issue on the VAT correcting tool, but then this VAT, the way it is collected in the chains along the distribution chains, at the end of the day, it keeps us in the vicious cycle of poverty, because you pay highly for a product. You also need money, because the source has also to be increased to cater for the products on the market. So in this case, EFRIS comes with such challenges, but they can be corrected. Then we have the seventh as EFRIS and the errors. You are in the shop, you are issuing out an invoice, you make errors. You have your customers are lined up and they're making, and this is a computer or this is a phone. quoting on a phone, you are bound to make errors. So while you're transacting, errors, they will come in. However, these errors were provided for by URA, and the system itself. We have create nodes where you can adjust or cancel the invoice when an error is made. But where the challenge comes in is that the mandate to cancel the invoice or cancel or to adjust the invoice, the approving authority is URA. URA, the approving the credit notes has been restricted to URA, and many taxpayers have find it hard, and they have paid huge sums of money out of the unapproved credit notes. In simple terms, I say I make an invoice, I make it on 25th, like today. I make it I make an invoice, and I want to cancel. This invoice has an error. I've made an error in it. Either or the product I've put in the invoice is not what is required or what is needed, and the customer says, I don't want this product, remove it. Or I'm not going to purchase, I'm not coming in town. Maybe he has called you. In this way, I will have to cancel the invoice. But remember, this invoice I'm canceling today has already charged VAT 18%. Assuming it was 1 million, 180,000 is already charged on my account, and it is reflected in the URA system, because this EFRIS is shared by URA and the trader. He's seeing whatever you are doing, and they are looking at everything. So it has already landed there. Now, if I say I want to cancel this invoice, I go in the system. I create a create node, I cancel, and it shows that it has gone to URA, but URA will not approve it. Many times it has not approved these create nodes, and you find that the month ends on 30th, the 180, you have to pay it. And in this way, EFRIS has given us challenges we have discussed with URA, and hopefully they will change their mind on this challenge. But of course, they have a reservation. They talk about traders wanting to cancel all the invoices and they don't pay taxes. But to me, there has to be a win-win situation. Then the other challenge that came with EFRIS is, of course, the corruption. EFRIS, in its advanced technology, was loaded on to taxpayers and to system providers. When the taxpayers were still learning the system, were still trying to figure out how to use the system, where is stock management section, where is the invoicing section, where is the reports. As taxpayers put in the stocks, they made errors. You find you are supposed to put in 10 pieces per soap, you put you put 100, or you maybe double click, and then the figure goes to even 1,000. So this stock, double stock or tripled stock values, the URA staff used it as a chance to extort money from taxpayers. They would come and say, we have a lot of stock and we want to do stock taking in your shop. Definitely, you don't have the 1,000 items, you have 0. So they will tell you, you have already sold the 1,000 because you had put them in the system. You have already sold them, and they did not pass through our system. So you are bound to pay the VAT component that you bypassed. I may say that way. And in this way, taxpayers, some of them paid, some of them were assessed unaffordable figures, and some of them closed shops, by the way, There are some businessmen, there are some traders who closed shops because of tripled stock levels that were audited, and the assessments for the VAT values were unaffordable, and they could. We have traders, we have taxpayers with assessments of 100 million, 200 million, 300 million, and they just abandoned the business. They have run away from the business. So this way, EFRIS comes with a challenge of that nature. The ninth is the EFRIS training and the grace period. As URA was rolling out, or as it's rolling out the EFRIS to the taxpayers, the URA tried, at first they trained the taxpayers, they trained the tax agents. But however, I'm talking about this new entrant on the VAT register. You have decided in January, you say, I now qualify to be on the VAT register. And the qualification is that your sales, your turnover is 150 million per year. You qualify to register. So you register in January. But you are not, but URA is not near you. It's not next to you to train you. No, you are, but of course, when you register, the URA system will see that this person has registered, and they will know that you're on VAT, and you come into the bracket of the penalties and the compliance, basically. So the training and the grace period to the new entrants is not there, is not given. Because you are supposed to be given the time to look for a competent accountant to handle your records, to handle tax matters, to look for a tax agent to handle, or even to look for the approved system provider. As I said, these system providers are approved by URA. So the new entrants, especially in the month of March and February, all that they received from URA or from the system challenges were the 6 million penalties. You go to your ledger, you find 6 million is already there, that you have issued this one, but yet you are not given time for training, and you are not given grace period to say, we shall start penalizing you after maybe 3 months or 4 months, until you get into the picture. Then the 10th EFRIS challenge is the small-scale suppliers. Since EFRIS introduction, small-scale suppliers who used to supply big suppliers lost out on business because they could not issue invoices. I'm talking about this small supplier, this person who makes cakes at home and is and has been supplying the cakes to a supermarket, but the supermarket is on an issue that you have to purchase from a person who is VAT registered. So what happened is that the small suppliers to the supermarkets were all blocked out by the supermarkets, because the supermarkets were put on tension that you have to, whatever you purchase must be on EFRIS, must be on the system. So the small suppliers lost out on the supplies to the big business people. And this, of course, created trade disorders, and you find that the common person now cannot get what to survive on. And in this way, the challenge came in with the system. Then the other one is about the level of education. We must all agree that most traders are semi-literate. There's a language barrier, there's an ability to understand the advanced accounting system, this EFRIS, and this will call for extra costs. But this person running a business with this level of education will have to employ a technical person, the accountant, and the IT person, and any other person who can help in the tax matters, including the tax agents. But Remember, also related to this, that most of in the informal sector, the space is also an issue. The shops, the way they are designed, the shops, the way we sit, the way they are, there's no space for that person you're talking about, the accountant. Where will the accountant sit? Where will they, where do I even put my computer? It's also a challenge downtown, and it's challenging the EFRIS system. Something will have to be done on that. Then the 12th is the EFRIS and the capital control. Well, capital control and ownership. With the introduction of the tax collection tool, the EFRIS, its rules and the regulations, the taxpayers feel not safe with their hard-earned capital. You sold something to come into business, and the government is saying, no, this business, we are running it together because it's putting a system, it's seeing everything, whatever it does, it's basically doing business with you. This way, traders anticipate, and of course, with the sorry, that was an interruption on the internet. And you must remember that the internet is one of the requirements for the EFRIS system. So, but however, there are modes and offline points. The capital, the taxpayers are talking about, and the way it is being controlled by the government, to them, or to the traders or main taxpayers, they feel that the government is contradicting its position on privatization policy. Because basically with EFRIS, 90% control will be by government. Because you want to do anything, you want to sell, you want to do anything when the government is not aware. And the bad part also that is on this line is that the expenses, where we spend money, where we would be getting our input VAT on purchases, you find that the other lines are not yet charging. For example, when you go to buy fuel, you find there's no EFRIS. You are going to Entebbe, you are passing the road toll fee correction point. There's no EFRIS. Water hasn't connected to EFRIS. Electricity, you find that you are paying in someone's name, and a few other areas where, but you can't get the input when you spend somewhere, because the other areas are not yet connected. So in this way, at the time when you are computing VAT for a month, the businessman will feel cheated that, wow, you are taking my money, and yet I paid I paid on fuel, I paid on, but it's not captured within your system. So that means all the VAT that you are taking, I should have reduced because I paid somewhere. So on the control and ownership of business, there's also a challenge that came along with all that is EFRIS related. The 13th is about the VAT returns and the payments. We all know that most customers in our business, in our informal sector, when they take a credit, they pay within 30 to 60 days. And of course, URA wants the resultant tax monthly before the 15th day of the next month. So this way, it is affecting the cash flows of the informal sector, the cash flows of the businessmen, small and medium enterprises in Uganda. And the relationship there, of course, because of the accumulated interests, is wearing out. The reason is the supplier or my customer has not paid me, but I have to pay URA because VAT is due for the 15th day of the next month. And my supplier has about a month to pay me. That means I'm going to pick money from my drawer to pay when my customer has not paid. Then those are some of the challenges that move with every system that the government can look at, that we can also, as Enterprise Uganda, as the private sector foundation, as other bodies, can come up and we look at them and get the potential recommendations. I've come up with a few recommendations, the potential recommendations. My recommendations are based on assumptions that goods go through the normal EFRIS trail and on how much VAT does the system collect at each collection point, and the other uses of the tool. What can the tool be used for apart from VAT correction? When I say the EFRIS, normal EFRIS trail, I mean the importer paid VAT at the entry point. The wholesaler was purchased from the importer, and he or she got the EFRIS invoice. Also, the retailer got the EFRIS invoice. So that is the assumption that I am basing on. I am not looking at the person outside the EFRIS trail. With a simple illustration, for example, that VAT is initiated at importation level and manufacturer's point, as I said, then to the wholesaler and the retailers, finally to the consumers. When you import goods worth 100 million, at the importation level, you pay 18 million with ease. But the VAT after this, when the goods are being distributed into the chain, what determines VAT is the profit margin that you add on the product. The wholesaler will add on a profit margin, the retailer will add on a profit margin, and that is what this system is trying to filter, is trying to look for. It's moving along the distribution chain to look for the 18% VAT. But remember, the 18 million is already paid by the manufacturer and is already paid by the importer. Me, the wholesaler, when I'm buying, I get that VAT, I pay it to him. So he pays it to the government. I only add on 10%, and it's out of this 10%, or 20, even if you add 20. But the margin, or the figure that comes after 18 million to the wholesaler is about just 1.8 million. When you use the rule of thumb, the input output, whatever method you use, but the figure you arrive at as a wholesaler, if you purchase, if you are transacting in the imports of 100 million, you'll find that the VAT that we are following is 1.8 million. Then at the retailer level, it will just slightly increase to about 1.98 million. So basically, the government is following, it has already gotten 18 million, but it's just following 1.8 and the 1.98. When you add them together, it's about 2.7 something. So that is out of 100 million transaction, the government is following that one to get it. And as it is trying to get that 2.7 million from the two lines, you find that that is when it is saying the EFRIS is helping us correct the 2.7, but already at 18 million was, it has already corrected it. However, as the government, the tax must be paid, must be corrected. But these are some of the recommendations that I came up with. One, EFRIS at importation and manufacturer's point. The biggest portion of VAT is being corrected at the importation and manufacturer's level. So the government can opt to increase the percentage to about 22%, or it can leave it at 18% and direct this EFRIS software or system only at the importation level or manufacturer's point, because it's why it gets the biggest portion of money, the 18 million. However, of course, increasing the rate also comes with complications of the increase in prices. But in this way, the government can save, because I'm sure the government must have paid a lot of money for every system, and it must be paying annual fees and updating fees. I mean, annual maybe. I'm not very sure of that, but I am sure it pays for this system. So it would also save on the taxpayers to put in the startup, to take care of these startup costs as we have looked at them. Though they are saying the mobile app is cheap and the others are cheap, but the inconveniences that they come up with, then the penalties that are also coming on the taxpayers, and then so it would also stabilize the market prices, the market price disparities I talked about earlier, and also the opening stock issue of double taxation. But I had my stock. I did not buy it through the Nemo EFRIS trade, and now I have to pay VAT. And yet the government had corrected the VAT 18% at the importation level. So in my view, the government has a big point here to. It has to do a lot of consultancy, a lot of computation to see, is it worth it that we should follow this 2.7 when we have already gotten 18 million, that the government will look at that. But my view is, even if it is left at the importation level and importers level and importers the importation level, the government still gets the 18%, and if it's left there, then the products will slightly not increase the prices. And at the end of the day, the standard of living, when I buy something, when I buy an item, I will find it at a slightly lower price, because recently I was challenged when I was in the upcountry area, and I wanted to buy a tin of a half kilogram of tin of Blue Band, and they told me 14,000. I mean, imagine 14,000 for half kilo. It is a bit high. The second recommendation is about EFRIS and the penalties. Of course, as I've said, the penalties are standardized: 6 million, 8 million. And what is the community saying? We are saying these penalties can be proportionate to the invoice value. If the invoice value is 10,000, get a small figure. Or if the figure, the VAT, you come across the invoice which has maybe 10,000 in VAT, and you want to penalize me, kindly we request or we recommend that you go by the invoice value, not the 6 million, because it hurts for me to buy a bottle of water at 1,000, and the trader gives me no receipt, or gives me a receipt which is not visualized. Then you charge the trader 6 million for 1,000. It's a bit high, so the government can look at the way it can charge proportionate to the invoice value. Then the third recommendation is about the opening stock. The government should grant taxpayers a grace period of about 2 years to sell off the old stock, or charge the VAT only on the profit margin of that specific stock. Or they can look at the they can look at the stock and value it, but I feel the grace period given to traders, to taxpayers, to sell out or to sell off the opening stock, the old stock, I mean, will remove the rift between the government and the traders and the taxpayers. The fourth one is about the credit notes. As I told you, credit notes are approved by URA. Me as a business person, as a trader, I have no right to approve. I just submit, and then. But remember, this is my business. It is me who was interacting with my customer. I know where we went wrong and where the problem is, and I've said I don't want this invoice. I have cancelled it, but the mandate to sign it is URA. So the government should allow the government, and we are saying the government should allow the owners of business to correct their transactional mistakes. Let them approve the credit notes by themselves. The fifth recommendation is about the training, the grace period to the new entrants. When they register, when you are or when someone voluntarily register for VAT, let him be given training before. Let there be training before registration. That is, if you are seen that you qualify for the VAT, you're above the 150 million threshold, then let them come in and train you first before they register you even. Or when they register you, let them train you. Let the government train the new entrants to VAT register, and also be given some time for the trader to look for the other requirements. Look for the tax agent, look for the service provider, the system provider, look for the accountant. Because as I said, though there are apps which are being developed by URA on the desktop, on the smartphones, but you find that some businesses are big. A business which qualifies for VAT, which has a turnover of 150 million, is of course big, that it cannot be handled on the smartphone. However, you can try. And of course, also within this area, you find that there's another recommendation I've thought about the small-scale suppliers. As I've talked about small-scale suppliers, these suppliers who supply to supermarkets, supply to big shops, but they make their cakes at home, because we are here to support the low-income earners also, and this has been the government mandate, and that's why even they have been put under the income tax bracket of presumptive taxpayers. They don't pay VAT. They have their grades of the taxes, and I'm saying suppliers who are not on the VAT, who are not registered on the VAT, let them be allowed to supply to the big shops, because they can issue the e-receipts. An e-receipt does not charge VAT because you are not VAT registered. So when the small-scale suppliers, the low-income earners, when they are supplying their products to supermarkets, let the government allow them on the e-receipts ticket. And also, these products can be classified and say, these ones, let them not be charged. Let the seller, the supermarket, let it not charge the VAT on these products, depending on because you find that if someone is making cakes, all the products of all the ingredients of making a cake, he has already paid VAT into that all. So the product is onto the market, but they have been blocked from supplying big shops. then this puts us to the end of our presentation. As the last point, as I've said, I am honored to be here with you, and we thank the Lord Almighty who have taken us through this far, and I stand to hear from you, the viewers, the listeners, the questions, the comments. Otherwise, I remain Samuel Asiimwe, a tax and business consultant. Thank you.
Thank you so much, Samuel. Very elaborate conversation there. Really very eye-opening challenges, and I thought the recommendations also were interesting, and there are a couple of practical things there, which I mean, if we get, we may be able to overcome the impasse. So Samuel thinks we have just about over 10 minutes to go, and I will at this moment kind of allow us an opportunity to ask any questions which we have. You could put up your hand and you ask the question. I also have a couple of them, a number of messages coming through in the chat box, many thank you messages for educating. Harriet says, thank you, Samuel, for educating us. I now understand the topic a lot better. Thank you, Samuel. Mary says, thank you. Moses, rather Martin also says, thank you. Lillian has a question, says thank you, but she has a question. She asks, after I pay income, I think she was asking, I think Lillian, you may have to put on your mic because I think there's only half of the question. Jonathan says, thank you for the detailed presentation. However, I think the challenges are more than the advantages given the kind of economy we are in. That's Joanne's comment. I see Millie says, Millie has a question. Samuel, you could answer this one. Does URA and government realize that all providers increase their cost of doing business? It appears like they're pushing people out of business. And yes, I think the question is, and I think you have alluded to it, Samuel, the cost of doing business. Do you envisage a way this can be implemented and at the same time not increase the cost of doing business for the business owner? Because what you mentioned, you could summarize it as cost of doing business. So do you envisage such a possibility? Yes, Martin says the policy may be good, but it seems implementation of it is very challenging. Another thank you message from Irene. So if you have a question, please do put up your hand and I will give you an opportunity to ask. We just have about 10 minutes and then I'll give an opportunity to Samuel to respond. The question which I wanted to add to the one which Millie talked about, you earlier mentioned about the opening stock challenge and kind of that kind of process of when you are being onboarded. I wanted you to elaborate a bit more in average when you look at the businesses. What's the lead time? How long do businesses take to kind of have this stock out of the system? And is that a time which URA could allow as a time of grace so that someone can be able to cross over during that period? Sam, you could answer those two questions and then we may have a couple more.
Thank you, Ronald. The first question was, I didn't get it properly, maybe you rewind, but then I'll go back to the one of the opening stock. The opening stock and the lead time, the time it's, that can be allowed for it to stay in the shop or to get out. Because when EFRIS came in, it was rolled out. They first trained some traders, they trained tax consultants, they trained the community. But the areas where we're supposed to have taken caution were not taken care of. The opening stock I talk about is which has already affected the businesses. And actually, that's why you hear so-and-so is saying I'm closing, so someone saying what. But the issue is when the EFRIS was rolled out, you remember or you will recall that most of the supermarkets had URA staff and army around, and they were blocked to say you must sell on EFRIS. So they were already affected, and this opening stock, what they had in the shop, they had to sell it as is. But as I said, the opening stock already had paid 18% at the border point or from the manufacturer, because ordinarily every item that enters into the shop has already paid VAT, the 18%. So when you come and say you must sell also and charge VAT, then you have to give me allowance. You have to allow me to reduce the 18% that the stock is carrying already, that I paid when I was getting this item. So the lead time, that one it will be a matter of discussion. I think for me, it's that they should have said that the items you I put the other option about the profit margin, that you can use profit margin to charge VAT if you don't want to go into this business of input output, because we know that if the product is this, it already has paid the 18%. But unfortunately, already taxpayers, businessmen are already cheated, because EFRIS came in and they started enforcing it, and they charged, and people paid a lot of VAT than they were supposed to pay. But however, it still remains an issue of discussion. I could not have answered it to the maximum, but members can also contribute. The other question, I think it was like a question, then it was also answered. Maybe you can remind me of it.
I think the other question was whether you envisage. I think the question was from Millie, and she felt like it appears that the system is synonymous with increasing cost of doing business. Are there experiences you have seen where EFRIS has helped people be able to reduce their cost of doing business, and is that an aspiration of the system?
Oh, thank you. Well, her issue is right. Her point is right. The cost of doing business is going to increase, because, as I've said, you need a competent accountant. I know there are talks by some people, I don't need an accountant. Once I have understood the system, the way it runs, I don't need an accountant. I can just sell, and I can just buy, sell. But mind you, there is what we call tax planning, where we have the tax avoidance and tax evasion, and we need to go by tax planning, tax avoiding. We need to say, am I supposed to pay all this tax? So this system, as I put it, is an advanced accounting software. The person to run it, the person to understand it, you have to analyze the implications of doing this, of navigating through this system. For example, if it's about sale, purchase, sell, purchase, and an ordinary person can handle it, you have the option of it will in the future at the end of the year, you need now income tax. Of course, this income tax, it will find in the system you don't have the expenses that would reduce on your sales. So you'll find that you'll pay income tax based only on the sales and the purchases, because most of the other payments are not in the system. Like as I've said, the water bills, the fuel we put in our vehicles, and many others, the people you pay around, and then. So I agree with you, and I will just assert that yes, this EFRIS system is going to increase the cost of doing business, but if it is rolled out by the government, then it will have to look at how to soften here and there, especially as I said, like on penalties and other things. But then the truth is the cost of doing business is going to increase. Thank you.
Thank you so much, Samuel. Felix, you had your hand up. I'll give you an opportunity to ask a question. Felix, please go ahead and unmute.
Yes, thank you, sir. I would also like to add my comment on the issue of stock, which can be resolved by VAT registration, stock EFRIS registration. While registering for VAT, you're given an opportunity to declare the input that you incurred in the past 6 months before registering for VAT. And it answers the question of a person who has joined EFRIS and he has old stock where they incurred VAT. Then for a person who has been, for people who were on VAT and then EFRIS was introduced, for them they had already declared their input versus output. So it was like a continuation. Then there is a challenge that was left out of EFRIS imagining that we all declare ourselves instantly, and therefore it doesn't give a chance of editing the date. For example, like radio stations, you can have a show at around in the night where the accountant isn't around. All these concerts, they hold like their concerts and they go past even midnight. But EFRIS won't give you chance to declare a sale and you edit the date that this transaction was for yesterday or it was for the other day. For it, it assumes that you're always around and there is always power to enable you do that. Thank you.
Thank you so much, Felix, for that, for those inputs. I think Samuel, you made comments on possibly add what Felix is saying. And then we also have a comment here, well, question. Simon Kicho is asking, give more clarification on the 6 and 8 million penalties. Possibly, Samuel, you can respond to those questions and then we can bring this to a close.
Thank you, Ronald. I will not divert from the Felix's question or Felix's comment, but I will also guide him that the EFRIS started with the modification of the ledgers by URA. URA has modified the ledger or has modified the return point of VAT. For example, it doesn't allow you, actually, we are following up with URA about the offsets. Because yes, I know, it is 6 months before you started, but then the ledger current URA is using does not show that my offset for the previous month was this one. You might not be aware of this, but it's the practical issue now that that is challenging the traders. Then on the stock, on the same stock still, which I'm talking about, the opening stock. The other big issue is, and as I'm saying, the imagination is I am a trader. Me, I have been buying stock. I didn't know that I'm buying. I'm supposed to buy from the EFRIS registered person. I've been buying from X and Y and Z, but they are not VAT registered. And I have my stock in the shop. I think I'm being very clear. I have my stock in the shop, but I bought it from 1, 2, 3 suppliers who did not give me an EFRIS receipt. And me, in my view, I am saying this VAT, whether it is being this stock, whether it is being distributed by a registered VAT person or business person or by none, it already paid VAT at the entry point. It still remains a challenge that the stocks we have in the shops already paid VAT, but we cannot get the claim. Even if you give me 6 months back, I have nothing to claim because I bought from non-registered person VAT. And the second one is that the ledgers currently are not showing that my offset, I'm supposed to use this offset of last month for this month. The ledgers are still a point of discussion. Of course, they were not part of the discussion today. I couldn't go into them, but this is how it is now. It is affecting the traders. Then for Simon, the 6 million and the 8 million. As I said, the traders lost out on the 6 million is they find you have a receipt or you have issued a receipt, you have not given the receipt, the receipt that is connected to the URA server, or you have given a cash sale and they get you and they know this cash sale is coming from shop number 1, also shop number 2. The penalty on that receipt is 6 million. Immediately, whether it is of 1,000, whether it is of 2,000, whether 500, the penalty of the receipt which is not visualized is 6 million. And at first, before it was modified, all the supermarkets were charged about the minimum that got the minimum number of receipts. I mean, if you had like 10, they got receipts from a supermarket. They get 10 receipts multiplied by 6 million, and those are the penalties that were flying around the country. But however, some supermarkets went to court and they argued, and the URA realized that it's supposed to be 6 million per month, and then they went in to correct it, put it per month. But otherwise, it had brought confusion in the country. People were closing shops, and by the way, people had paid. There are some people who paid over 100 million out of this 6 million before it was changed to 6 million per month. And then on the 8 million, the 8 million is when you are not using the system. You have a shop, the URA comes in, they find you don't have a system, you don't have any app, you are selling outright this one, and they are not looking at the receipt now. They are looking at you are not complying with the law. You don't have a system in your business. Automatically, you qualify for 8 million penalty. And of course, what I did not put, of course, there was a part of imprisonment. You have heard of the imprisonment that they can imprison you for 10 years if you don't use the EFRIS system. So that is the part of the penalties. I think Simon I've answered your question. The one for Felix, of course, still has some issues with none and vertebral, but thank you.
Great. Thanks a lot, Samuel. It's been quite a deep engagement. Thank you so much for sharing with us. I'll just give you 1 or 2 minutes to share your final remarks, and we can bring the session to a close.
Thank you, Ronald. I'm honored to be here to meet the listeners. I know I've heard their comments; they were very good. But we thank the Lord for guiding us, and we call upon everybody, wherever you are, to keep learning. If we learn this system, we'll get where to go, all where we are advise the government appropriately. Thank you, and God bless you.